Allied Properties, a real estate investment trust, the office specialist, just announced its Q1 results, and it did warn investors that some of its tenants, hardly surprisingly, are delaying decisions in this period of uncertainty over tariffs. We're joined now by the CEO, Cecilia Williams, in the studio. Thank you very much for joining us, Cecilia.
Thanks for having me.
So naturally, your clients just don't know what the future brings, and some of them are delaying renewal decisions, for example.
Yeah, we had an instance of one or two in the quarter that were just hitting pause for the time being. But for the most part, we're seeing quite healthy level of leasing demand. We actually have 1.38 million square feet in our leasing pipeline, which is up almost 40% from last quarter. So we're seeing there continues to be demand from the tech sector and increasingly from educational uses and medical uses.
And you, of course, I think of your buildings, you renovate older buildings is your best known franchise. And of course, tech companies like that.
Yes.
What do you call it? The beam and...
Brick and beam.
Brick and beam.
Brick and beam.
Yeah,
That's
they like that stripped down look.
They do. No, they do. They like, the distinctive space, the space that we're known for is space where there's a lot of natural light, high ceilings, exposed structural frames. And it's not just the tech sector that likes that now, but most of the knowledge-based organizations, they understand that they need to have inspiring space to not only attract talent, but to retain it. And that's as important now as it's ever been.
Apparently, Canada and the US, though, have among the highest proportion of workers still working from home several days a week. Now, I don't know if that's distorted by the public sector or not, but employers are having trouble bringing people in, insofar as they want people to come back in. Employers still facing challenges there?
We're not hearing as much about that, to be honest. I mean, we don't have the government in our portfolio, and I believe that they are the ones that are, I guess, let's call it the laggards of returning to office. What we're seeing in our portfolio is increasingly, and we serve knowledge-based organizations in Canadian cities. They want their people back, and there just isn't as much chatter about the working from anywhere or working from home. It's really about having flexibility, and I think that's always been in the system. So we're not hearing as much about that. We're increasingly seeing that users want to lock good space down. So
now, your vacancy rate is roughly 13% right now. And then could we just talk about this availability? Because some of your space is available for sublease.
Correct.
And so that leads to a metric called total availability. And that has gone back to the record high of almost 19%. But it's not... availability is not the same as vacancy?
No, that's right. The sublease space we're currently collecting rent on, so it doesn't impact us from a financial perspective. It's the direct vacancy, which wouldn't include the sublease space. That's what we would really focus on in terms of leasing up space and showing organic growth from the portfolio.
Right.
And that's what we're focused on.
The vacancy rate.
Correct.
Yeah. Where are you? Have you come down from the peak in terms of vacancy, or can you give us some perspective?
No, we've stabilized at 87%. And so
occupancy.
Occupancy,
yes,
correct.
Yes,
sorry,
yes.
I like to focus on the occupancy.
Of course. Yeah.
And we're expecting that to get to at least 90% by the end of 2025. 90%
at least. It's been a tough few years in the office business.
Yes, it's been. There's been, I think, there's negative investor sentiment that's broad-based. So the public capital markets are really reflecting that broad-based fear, and it's not reflecting really our fundamentals or what we're seeing in our portfolio. But in time, we'll be recognized for our fundamentals. So we're being patient and we're focusing on what we can control.
Your sorry, I was being rude there. I was just confirming your distribution yield, almost 12%.
Yes.
Are you currently comfortable that you can cover the distribution?
Absolutely, yes. We're very comfortable with it, and we will be maintaining it for the balance of the year.
Would you increase it, or?
I don't see us increasing it. I mean, it's a conversation that we have with our board every quarter. We will certainly be maintaining it for 2025, and we'll reassess whether to maintain or increase in December.
Cecilia, thank you very much.
Thanks for having me.
Cecilia Williams, President and CEO at Allied Properties